Money FM 89.3, best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Let's take a look at how things wrapped up on the first trading day of the week. And we have some slight gains for the S&P 500. And this as Treasury yields came off their highs and investors sought to look past Moody's downgrade of the United States credit rating. And we are seeing a renewed wave of dip buying, helping to erase earlier losses. The benchmark adding 0.1% to close at 5,963. So that makes it 6 straight winning days. The Nasdaq Composite inched up 0.02%. And we have the Dow Industrial Average, Dow Jones Industrial Average, rising 137 points. Now let's check in with George Schultze. He is the founder and managing member at Schultze Asset Management. George, thanks for joining us on the show. How are you doing these days?
Doing well. Thanks for having me, Ryan. I could certainly relate to the discussion you just had about commuters making noises. On my commute back out of New York City today, somebody was doing just that, so it was a little bit frustrating.
Yep.
But how are you?
I'm doing good. Quite an experience taking the New York subway, I'm sure. Let's talk about the experience in the markets in the latest trading session. We did get that Moody's downgrade, and this, of course, is the last credit ratings agency to do so. So officially downgrading the U.S. from AAA, the top level, to AA1. There was a bit of a reaction, but it seems like folks are shaking that off. Why are you taking away from this?
Yeah, so it's just one other bad news item after multiple other ones recently. I mean, we had all these tariff trade wars, issues with U.S. China trade relations, uncertainties after the markets had rallied so much in the last few years up until the end of last year that we saw a big sell-off in April and then a recovery into early May now. But really, I would say in general, investor confidence has been shaken with all this uncertainty, with this news of a downgrade to the U.S. economy. Another one, the third rating agency, is certainly giving investors concern and fear over taking risk, I would say. So it's a changing economic environment. And although here at Schultze Asset Management, we're not expecting a recession, there's certainly more concern about the outlook for the future. And I think generally, many investors are starting to put money in other markets due to fear over what might be happening in the U.S. and how this whole thing with tariffs and trade policy might shake out.
Yeah, let's talk about that prevailing sentiment in the markets right now. We have been seeing more deal making because of the, easing of tensions to some degree. We've got deals done between countries, bilateral deals at least. Is that a sign of things turning around for markets?
In my view, there is. It's a good question, Ryan, because you've probably hit the high in terms of investor uncertainty and sort of chaos. And if you look at historic action by President Trump, that's kind of how he negotiates. He'll push all the way to the very extreme limit at the beginning of a negotiation and then let himself be walked back to a midpoint that is pretty favorable. And I think that's what we're seeing. Now, of course, this is quite a negotiation. It's a multilateral, multi-country negotiation happening around the planet with the U.S. and tariffs and trade barriers and an effort of dismantling decades of prior trade policy. So we shall see how it all shakes out. But I think we really hit the worst of it, the worst of sentiment during April. And now, as you hear and learn about specific deals that are struck, first with the UK and now, partial deal with China and others going forward, I think you'll get a lot more clarity and a lot more certainty through the balance of this year.
Yeah. Is that being reflected in what you're hearing from the earnings season commentary, the projections, the guidance and the outlooks?
Not yet is the answer. During the first quarter, and most companies have already now completed reporting their first quarter results, really the figures and the impact of tariffs has not really come through the financial statements for companies that report earnings, at least not for the first quarter. Now, it's important to remember, though, that tariffs really kicked in during April. So the second quarter of this fiscal year will be an important one to watch. However, if you get past that and if tariff deals are negotiated, I think most financial analysts that follow companies will soon start to look at the second quarter as a one-time aberration, depending on how deals are struck and which companies have, made it over the finish line in terms of their ability to source supply or ship new product into the U.S. market, despite this tariff policy, all these tariff policy changes and, the resolutions and the deals that will be struck. Yeah. Going forward, many companies have pulled their guidance because the timing is it's too uncertain right now. The economic outlook is very unclear with all this massive change in trade policy.
Yeah, George, you mentioned you're not looking at a recession as a base case, but I'm thinking how much of a slowdown we're looking at because of the front loading from the perspective of the people trying to jump ahead of the tariffs kicking in. So they've probably built up some level of inventory so they don't need to order as much in the coming quarters?
That's right. Yeah, there's been a pull forward of future demand because lots of people, customers and companies were trying to pull product in before the tariffs impacted their operations. So we'll see how that all settles out and gets resolved in the next few quarters. But I think that's right. I think you'll see a pull and a push in the second quarter. Now, the latest U.S. reading on the U.S. economy was that the economy contracted by 0.3% for the first quarter. And that's concerning, but there are one-time items in that. So we'll see how that all shakes out going forward.
All right.
I think on a broader basis, the Fed is still not anticipating a recession this year. But if it becomes clear that the U.S. Fed, is expecting a recession, then, of course, it can react by lowering interest rates and potentially also turning around quantitative tightening, which has been happening month by month in the U.S. economy.
All right, let's talk about the investment implications. And I think you alluded to this to some degree with folks looking beyond the U.S. markets for where they are allocating their resources. Where are you looking at right now, George?
Sure, yeah. There's a really changing environment, a really dynamic picture that's been developing lately. There are some more opportunities outside of the U.S. We've been looking at some markets like China and Germany, both of which are benefiting from new governmental spending. In Germany, you have a new infrastructure spend, a new defense spend. In China, you have new governmental fiscal spending and an outlook that looks like it's starting to improve. But another big takeaway is that more and more companies, at least in the U.S. and also globally, are facing the risk of distress. And that is because of inflation, secular change, much higher interest rate policy than we had about 24 months ago, 36 months ago, and now tariffs and all the transformation that comes with tariffs and trade wars. These are all macroeconomic changes and shocks. And if you push those kinds of shocks on a company that's over-leveraged, that can create distress and really, create interesting new investment opportunities. So that's what we're focusing on here at Schultze Asset Management.
Yeah, Josh, I'm also wondering what you're making of the capital markets these days, IPOs, for example. eToro went to market not too long ago, and they had a pretty good day one. Is that a sign of risk appetite in some quarters for some of these names? What do you make of the eToro debut, for example?
That's interesting. I haven't studied that one so specifically, but yeah, I think there are a lot of good companies that have been waiting in the wings to come into the market with new IPOs. I think that will likely increase going forward. But remember, looking backwards, we've come from a period where those markets have been kind of closed for many months. And so, I think investors are ready for that, but so are the companies and the management teams that run them. And, I think as you get past a lot of this market uncertainty that we had in the first few months of this year and start to have those trade deals develop like we were talking about earlier, I think there's a more and more open opportunity for companies to come to the market with IPOs.
Yeah.
But you also have to monitor what's happening with interest rates and changes to interest rate policy.
All right. So a lot of moving parts to keep track of, and helping us out this morning to navigate what's coming is George Schultze. He is the founder and managing member at Schultze Asset Management. George, thanks for your time as always, and thank you so much for your insights.
Thank you, Ryan. I hope you all have a great day.
You too. Catch up again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.